I'll start sharing now the video, then you guys enjoy. Uh,
Let the
Philip, can you
people in,
help?
then hit the share.
Yep, help me
Let them in
admit.
now. I like it.
Welcome back to the Opportunity Zone. Nate Armstrong here, joined by my partner and co-host, Mr. Chris Lavin. Chris, how you doing
Nick,
today?
how you doing? I like that new snazzy intro you got going on there. What's that about?
Little throwback.
Nice.
Little
I
throwback.
like it. I like it.
So Chris and I have a lot to cover.
We do.
Federal Reserve's meeting tomorrow. I just heard Chris on the phone talking with our lender. There's some interest rates, things that are going on right now that you're definitely going to want to hear. What is Jerome Powell going to do? We're going to cover that on today's show. We're also going to talk about consumer savings and where we're at right now with the highest debt that we've seen with consumers and the lowest amount of savings and what that means for us as landlords in this market. Another big thing is that Biden's Band-Aid on foreclosures is about to be ripped off. And so we're going to talk about what the implications that might have in the marketplace as well. So all that and more on this week's Opportunity Zone. Chris, before I jump into kind of the news, I want to cover just a short Bible lesson.
Please.
And then I'll ask you to bless us and then we'll jump in. Okay. So in the Bible, there's this book called the Book of Ruth. And basically, Ruth follows her mother-in-law, Naomi. After Ruth's husband dies and Naomi's husband dies, she follows her mother, Naomi, back into her native land, back into Israel. And while she's there, she's trying to take care of her mother-in-law. Ruth is doing everything she can, but she runs out of food. She goes and basically starts picking food from a farm nearby after the farmers were dropping some of the crop behind the trailer. Well, in this process, the farmer, Boaz, a wealthy man in the community, recognizes young Ruth and he starts to treat her very favorably. Well, eventually he falls in love with her and he marries her and they have a child named Obed. Chris, did you know that Obed is the name of the landscaper you referred me?
I do.
And when I read this in the Bible this morning, I'm like, Obed, I see where his parents got the name.
Yep.
Well, here's the lineage. Here's the point. Okay. Obed was the father of Jesse. Jesse was the father of David. You may have heard the name King David in the Bible. And all this came because of the redemption that Boaz provided to Ruth. If Ruth would not have been able to marry, if she would not have followed her mother-in-law, if she would have not done what she did to look after her mother-in-law and care for her, then Boaz would have never found her. And we wouldn't have the lineage that led to King David, which eventually led to Jesus. So major events in history. But with that said, Chris, could you give us a quick blessing and we'll jump into the news?
Absolutely. Heavenly Father, first and foremost, I'd like to acknowledge who you are in my life. I've acknowledged that you're everything, and everything in my life is a blessing and a miracle. Please allow us to reveal some knowledge and some truths to the people that are listening to us today. Reveal the hidden truths that we need as we navigate through these peculiar times in a current financial situation, in the current situation under the battle back and forth between Trump and Powell. So hopefully we'll be good stewards of the things that you blessed us with, and we can carry these blessings forward. I ask this in your name. Amen.
Amen. And that battle that you're talking about, Chris, I know you and I have covered it quite a bit, but it's real.
Yes.
It's really affecting people, and we're going to cover that in the news today. The renters, especially that are in buildings or single family houses right now, they're feeling the pinch, and so we need to go through some of this because it's going to affect you as an investor or a potential investor jumping into real estate. You need to know these things. You need to understand what your tenant base is going through right now. So I'm going to go ahead and share screen, and we're going to start dissecting the news. So first up, why Trump and investors will probably be disappointed by the Fed this week. Chris, I know the Fed is meeting tomorrow. Jerome Powell, why might they be disappointed? What's going on in Fed land?
Oh, because Jerome Powell is not done teaching President a lesson yet. So, Trump's backed off and he's not as vocal, but Powell is not going to back down very easily. And I firmly believe that, nope, we're going to keep interest rates where they are for another round, another session, another little bit, just to teach you who's boss.
And we saw jobs reports come out
Yeah.
and they surprised the market.
Yes, it did. Nobody expected the rebound and the jobs to be up.
People were thinking that they were going to be down, and instead they were up.
Yep.
And now all of a sudden, here we are. And Jerome Powell could have said, if jobs were down, we're going to pull the rates down. But now he's going to be staring at the jobs reports tomorrow as he reads the press, and he's going to say, I'm sorry, but jobs are up. We've got a healthy economy. There's no reason to pull this down. So what does this mean for us getting a new loan? We've got a couple buildings that are in our pipeline right now. What does it mean for us going and getting a loan and potential sellers in the marketplace?
Okay, so let me make a couple of things perfectly clear. What we deal with is not typical because of our performance record and everything else. So when we deal with the banks, we get the cream of the crop, right? But it still means that we're getting the top percentage of a terrible situation. I mean, at the end of the day, right? Rates are up. The 10-year was up to 4.32 this morning. I noticed, or today, right before we got on the air. And there's a spread off of that 10-year is where we get our rates locked in at. So we're feeling it too, as a result of what's going on between Powell and Trump.
So the silver lining for all of this is that when you have the interest rates holding higher for longer, is a lot of sellers who thought they were going to get X for their property, this astronomical price. Buyers are coming in today, they're measuring the numbers like we do. We crunch the numbers harder than anything else. And when we're measuring it, we're saying, you know what, based on today's interest rates, your property is not worth this. It's worth this. So what we lock into today can have significant value if rates come down in the future.
Correct.
So we're buying stuff at a discount because rates are held higher for longer.
Right. So we're going to buy at a discount and we'll carry that through to when rates come down, and then of course our property values will go up. But I want to point out one other thing. So, and I hate to benefit from negative times, but here's the reality. So over the past three years, operators have taken out terrible loans, variable rate loans. And, we see it all over the news where people are going into foreclosure and all this stuff. We are not suffering those consequences because we did not make those mistakes, right? So, and I'm giving you that whole backstory to tell you this. We are now taking advantage of the situation or the poor mistakes and decisions that other operators made in the past. We're able to come in, swoop in, and grab a deal because now they've got these variable rate loans, and the situation is compounded and made worse by these escalating rates all at the same time. Making property, you might have gotten it at 3% a couple of years ago. Now your interest rate is 12%, and you can't operate that property with any profits at all. And a lot of poor operators, what they've done is they've held on, right? And so now they're DSCR negative. They can't get a new loan. They're NOI negative. Banks aren't refinancing them because they're not performing. So they have to throw in another couple $1 million or get out. And so a lot of them are opting to get out to try and save what little dignity they have left. And that gives us the opportunity to come in as sophisticated and proven operators, go in and negotiate terms and get deals and properties at the rates that we need them at to be profitable for our investors.
Chris and I have been hit up twice in the last week by folks that took out bad loans.
Yep.
Who are trying to, they call it recapitalize their properties. They're basically saying, hey, give us more money so we can pay off our bad loan and get into a new loan. And that's very common in the marketplace right now.
And I frame that. So I've done such a poor job at managing your money. Will you give me more? That's basically what's happening with a lot of these people. And again, back 3-4 years ago, when interest rates were 3%, 2%, 1%, it was easy to be a superstar. But now you're seeing where the rubber hits the road, and people with proven track records and experience know how to operate in these times.
Warren Buffett is retiring, so I'm going to use Warren Buffett's quote. He always says, when the tide goes out, you get to see who's swimming naked. And we're seeing that right now. Okay, let's move forward here. So in the shakeup of all this battle of interest rates and economy and whatnot, we're seeing households go into debt right now. We're at an all-time high for credit card debt right now on the American consumer, American household. How does this affect us as investors, Chris?
Oh my gosh, this is a low story. You sure you want to hear it? Okay, so here's what happens. So as consumers hold on to credit card debt or increase their credit card debt, anybody that knows anything about the way your credit score works, one of the measures is how much debt you're carrying on credit cards and how you're managing that debt and how well you're managing that debt and how much of that debt is consumes your monthly income. As debt increases on credit cards, credit scores go down. As credit scores go down, a mortgage rate and the available mortgage rate for a consumer goes up. So what happens when the mortgage rate goes up? That means they can afford less house. And basically people are credit card charging themselves into a situation that they can't get out of, so they're going to continue to rent. And while all of that sounds terrible for Joe Blow consumer, it's absolutely wonderful for for us operators, because they need to continue to have affordable, good places to live. And if you're a good operator with a good property, you're attracting these people into your communities, into your properties, and they're continuing to rent, and they're staying longer. And if they become fiscally responsible, it's going to be 3 years before they get out of it. So over the next 3 years, you're going to see a decrease in vacancies in multifamily, and that's going to drive values and rents up.
So
Sorry, long-winded.
in summary, like when the American consumer gets pinched, they turn into renters. We
Yes.
saw this big time 2008, 2009, 2010, and we anticipate more of that happening right now. And I hate to prey on that bad news as
Yeah.
well. It's just the reality of the situation.
Yeah, but we're also providing a safe place for people to land, right?
Mhm.
I mean, that's the reality of it. So yeah, we're benefiting, but we're also providing a safe place for people to land because we care.
Chris, I just want to comment on one of the coolest calls that we ever got to had today. And I know that we've been
Okay.
implementing this for a while, but we literally got to bring an on-site pastor into 3 of our communities today. And what they're doing now for these families on site, building community, building friendships between fellow tenants, new tenant orientations, resources when they have a hard time financially or fiscally for their family. Like it's really cool. And I want to commend you publicly, Chris, for really being an advocate and pushing for that.
Thank you.
Thank you. So as things get tighter, our tenants are going to be in hopefully a more loved position.
Yes.
Cool. Let's move over to, I need to talk about the market as a whole for housing. Now I'm going to talk single family housing because Chris kind of teed me up for it. We were talking about tighter budgets lead to folks turning into more renters. Well, what does that mean for sales on single family houses? Well, here's what's stacking up right now and the key trends. I won't go through this word for word in the whole article, but inventory is stacking up. We're up 20% year over year. This is quickly switching from a seller's market that we saw last year to a buyer's market. Now, price-wise, we still stretched a little bit and we got to a new all-time high on average across the United States. That doesn't mean that there's not prices falling. There are some cities right now, like Cape Coral, Florida as an example, Austin, Texas as another, that prices are actually coming down. And even California finally made that list for prices starting to rescind in some cities. So if you're not seeing it yet, you might see it. This is kind of a little bit looks like it's peaking out. Mortgage trends. Chris, while Jerome Powell says, no, I'm not going to move interest rates, what do you forecast for mortgage rate projections? What happens after he says no tomorrow?
After he says no tomorrow, then, it's tough to predict what the consumer mortgage rate is going to be, because what I have expected historically for them to go up, they've actually, the mortgage companies are reducing their spread to increase the quantity. So to increase quantity or number of transactions that are happening. If it stays where it is, I think one of the things too is people are always waiting. Oh, wait until next week and see what the Fed says and see what they does. So I think initially, if he holds, there's going to be a waterfall or the floodgates opening, getting a few. But I think at the end of the day, they're going to pretty much stay. I don't see much movement. I just don't.
Little more of a punting. It's just going to probably sit around the same.
Yeah.
I agree. Okay, I got to switch gears on this again, Chris. I want to talk about something that Trump just ended.
Whew.
And this is going to be this is a really big deal. The numbers here are staggering. So Trump is ending now an FHA COVID era mortgage assistance program that was brought out by Biden's administration. And we used to jokingly call this the Biden Band-Aid.
Yeah.
The Biden Band-Aid. What this is basically when someone's going into default, basically the FHA would step in and cover the default and we wouldn't have a foreclosure. So there was no foreclosure happening or very, very few foreclosures happening. This chart right here should tell it all. Okay, I'm going to read the line right above this.
Yep.
Of the 52,000 FHA loans last year that went seriously delinquent within their first year, this isn't like someone that's been there forever. This is someone that just got a new mortgage, and within their first year, they went seriously delinquent, which is usually defined as more than 3 months of missed payments. only 9 of them resulted in foreclosure. So this Biden Band-Aid meant that literally only 9 of 52,000 actually turned into a foreclosure.
What is that? A half of a half percent? Like, it's nothing. It's ridiculous.
There should have been a lot more.
That-
There should have been a lot.
Ridiculous.
There should have been like a mountain. And I'm not going to say that, this chart right here should have said it all. This peak line back here is 2007, 2008, when there were, or 2010 rather, when we saw a lot of foreclosures come through the system. Ever since then, we've been way down here, like very few foreclosures happening in the United States of America. And a lot of it was because of this Biden Band-Aid.
Yes.
Now the Biden Band-Aid's pulled off,
You're,
Chris.
you're going to see a spike. It's just going to go through the roof. It has to. In other words, banks can't continue to cover mortgages or carry mortgages that are not going to be paid. The FHA has only got so many resources. They're not going to go in and bail out every one of these mortgages. There has to be foreclosures. And I've got personal feelings about this kind of things because I'm personally involved in a transaction, buying a home that's pre-foreclosure. And some of these people are just taking advantage of the system. Now there are people who seriously landed on hard times. But for me, it's kind of a pet peeve that because I watched people in 2008 refinance their homes for ridiculous amounts of money and literally walk away. So you're going to see that happening again here. So when people are scared, get greedy.
That's
Get
That's-
greedy.
yeah, yep. I don't necessarily like the term greed, but
Yeah.
in reality, like if we don't step in and buy some of these properties, they will go through foreclosure.
Yeah.
Inevitably. I know what you're doing for the guy up in Orlando right now.
Yep.
You're saving him for foreclosure by taking
Correct.
over his mortgage and
Correct.
buying him out in his property. So expect more of that.
Lots.
The official date for that, they signed an executive order for it already. September, it has to be fully implemented. So between now and September, there's probably going to be an uptick. Come this fall, we'll probably see the wave. That will be the big spike. All of a sudden,
Just
like
in time for Christmas.
that,
Wow. I
that's-
just realized that.
that's the brutal part.
That's going to stink.
A lot of people might be homeless during that time frame if
That's going to stink.
the bank really goes after them.
The banks they have to stay afloat. They're a business. I know we're talking about people's houses, but they're a business. This is
Yeah.
going to be a rough year, man.
Yeah, that's
Wow, that kind of just hit me, man. It
so.
really did.
So we're talking single family.
Yep.
Okay, I don't want to confuse people, but I'm going to switch gears.